All right. Hey guys, Brad here at Elliott Wave Made Simple. We're going to take a look at silver. Man, this thing has been running. Where is it going next? Is this little pullback area, is it over? Let's dive into the chart and take a look at silver. Here we go. All right, so we had this move up. There's a couple of different ways to count it as we use Elliott Wave speak. We call these labels a count. And right now I've got us in the heart of a third wave, which is the longest and most powerful wave on any time frame. But this happens to be a slightly larger degree wave third, the likes of which we haven't seen in many years in silver, quite honestly. So here we are. We had the low. This is my buy box. And we got a 1, 2. We got a 3. This is a lower degree. The actual wave that I'm tracking is even bigger than this 1, 2. It actually goes all the way back over here to this high, all the way back in July. So this whole thing is a very large 1, 2, and then off the bottom, which is down here, didn't quite make it. This was a little disappointing. I don't know if you guys were with me here. We were looking back in early August. We were looking for one more low, and it just gave us a nominal low, and it couldn't wait, and it just took off. So this was the next buying region. And this is an excellent lesson right here for new Elliott Wave practitioners. I mean, step one is understanding what you're looking at. But once you understand what you're looking at, the ideal place to make an Elliott Wave trade is let's say we're going long in this example. We're going to use silver as a real example. You want to see 5 waves up. And now you understand more about 5 waves. What does that mean? If you've been watching my channel, especially been watching silver, because the last couple of videos I got into the details of what it is to measure 5 up. 1, measure for the 2. You should get a wave 3 that normally targets in a strong bull market the 1.618. Then we know how to measure for a wave 4, right? Once you get the wave 4, now you gotta have the 5th wave up to make it a legit 5 waves. Because if it's only 3 up, it always runs a risk of being corrective. Yes, there are other contexts where a 3-wave move can give you a net advancement of price. But for the purposes of this video, I'm keeping it simple. And also we're talking about silver, which at the moment is moving it as if it's a true impulse 5-wave move. Why? Well, because these subwaves are playing out 5 up, 3 back. So the holy grail to get long in Elliott Wave is you want to wait to see 5 up, no FOMO. This is really for a swing trade, by the way. Elliott Wave is, I think, much better suited for a longer swing trade. What I do is I'm a scalper day trader, but I use Elliott Wave to catch a runner. So after you see 5 waves up, and don't know FOMO. You didn't miss anything. You watched it do 5 up. Great, fine. Wait for it to pull back, and it's going to be the nature of that pullback where you can start layering into longs. And even if you take some heat, if price does not get all the way down to the beginning of the original 5-wave structure, then you're still legit. But if you're following me, I'm going to give you clues because it's the structure of the decline that creates some very powerful clues. So until you learn how to do it yourself, just subscribe, like this video, so I'll be encouraged to keep making more, and just follow me. I'm doing 2 a week on probably silver as long as this bullish trend keeps playing out, because I'm focused on silver. So I'm presenting what I'm focused on, which is really crude oil, silver, NASDAQ, RTY, GJ, maybe another currency pair, gold. Anyway, let's dive back to the chart. And what I was just talking about, let me show you. When you get 5 up like this, 1, 2, 3, 4, 5, for wave 1, no FOMO. wait for a 3-wave pullback. And as you can see on this chart, I got a buy box right there. And this thing just got between the 50% and the 618, which I was prepared to keep buying and keep adding, honestly, all the way down to about here. But I didn't get that far. So I added again somewhere in here. The idea is to add, you want to add in a manner that you feel the risk reward is worth it. And that the real value of Elliott wave is if you get a true 5-wave impulse like this, and you get a 3-wave correction that does not make a new low, obviously, then the odds are it's going to go higher. So that is what happened. So here, this is the real next 5-wave structure that I'm tracking, is this white circle, wave 1, 2, and then, as you know, or maybe you don't, you're about to find out, in Elliott wave, it's fractal. So inside of the 5-wave move, waves 1, 3, and 5 subdivide into 5 waves. So because I think we are possibly in this white wave 3, okay, which projects, by the way, over to here, call it 31. Anything over 30 is going to be great, honestly. But the ideal target for me is like 31.11. If it wants to extend, great. But I like 31.11 as the target for wave 5. And so what you see now are the subdivisions inside of this white wave 3. So wave 3 should subdivide into 5 waves. This is what I mean by context. There is really no other methodology that gives you better context than Elliott wave. It's the context of price. Like, if I didn't have the larger context that I just described, then I wouldn't really understand what I should be looking for in this area. But because I've just explained to you the larger context, I believe we are potentially inside of a wave 3 now. That means I should be looking for 5 waves again. So 5 up. This is an ABC correction. We got another wave 3 that came very nicely into the fibs that I would be expecting for a wave 3. And no matter how I count this, there's a couple different ways to count it, but it's coming up like, yeah, that should be a wave 3. And then we had a 3-wave correction, because guess what? Waves 1, waves 3, and waves 5 are composed of 5 waves, a great majority of the time, in a standard impulsive move. And waves 2 and waves 4 are typically subdividing into 3 waves. So this wave 4 definitely subdivide in 3 waves. Here's the thing. These blue vertical fibs are timing fibs for a wave 4. It can still be a wave 4, even if this comes back down and gets all the way over here lower. It's still a wave 4. For me, what's going to kill my bullish enthusiasm is if price gets below 28.50. I find it rather remarkable that what I'm measuring as wave 1 is exactly at 28.50. It's just a nice round number right in the middle. So in any case, and as long as price stays above that level, it can still qualify as a wave 4. And these are timing fibs. Ideally, wouldn't it be great if wave 4 was already done? Because this is an ABC, and it did strike my yellow fib, which is my measurement. My standard measurement for A equals C is the 100 fib. Okay. And that's what we got. I mean, it came down almost to the penny, missed it by 2 pennies, and then it had a reaction. So the way I'm looking at this right now in silver is, if wave 4 is done right here, if that's the case, then this is the target box, and these are the fibs that go with the white wave 3. Now, these are extensions, but that's what it is. This is just the way I'm measuring it. It's actually, I just realized, let me extend these purple fibs, because now I'm just curious where the 200 fib and the 2382 look. Okay, wow, look at that. So I'm always looking for confluence, and wouldn't you know, look at the 283 in purple lines up to the penny with the 2382 in white. So these are two different ways to count this structure. And this is, remember, I just said a moment ago, I like 3111. Well, now I really like it 3110, 3110 and a half, 3111. It's in this box, it's in this ratio box. So this is the ideal. Now, here I will take off. I've only made one trade since I went long much lower, and I took it off. Don't ask me where. I mean, I could find out, but who cares? I took some off, but then I added it back. So what I'm doing is, some call it trading around a core, but I resist the urge to get too cute. Like, I had to resist the urge to book gains up here because I really want to book gains up here. So if it arrives up into this box, it is very likely that I'm going to take off the entire position. That's a little bit risky with silver because it can do anything. So sometimes what I'll do is take off everything but maybe two positions. Like right now I have something like, I have to look. It's either 5 or 6 positions that I have in silver, and I'll probably leave on either 1 or 2 if I'm lucky enough to see it come up into this 30, 31, or just poking above 31. This box is the ideal target, these fibs right here. So what I'm actually going to do is, just to make it visually easier for me to understand where I'm at, I'm just going to bring this over. Boom. So that's kind of my target line right there. If this is wave 4, we're looking for 5 up, a small degree nano 5 up, which I don't see anything like that right now yet. But we'll look for 5 up and then a retrace, and then a continuation of a wave 3, a wave 4, and a final 5 of 3. That's the way we'll say it in Elliott wave speak. In other words, just so you visually understand, like, I don't know where this is going to go, but it would be something, maybe something along, these lines, something like that. And what I like about Elliott wave 2 is that the more price information that fills in, then I can adjust, and then I can make some fib projections. Just as I've made these fib projections off of this price action over here, once I get some price action over here, I'll be able to make some fib projections. And then, of course, with Elliott wave, there's always subjectivity involved. There's judgments that need to be made. Elliott wave is not a strict rules-based methodology. There are rules, but there are only a few hard and fast immutable rules. There are way more guidelines than there are rules, and the guidelines is where the subjectivity comes into play. But through experience and through imitating what you're viewing on my chart and making the charts yourself, you're going to basically teach yourself how to perform Elliott wave. And the more you do it, the better you get at it. And you can compare what you're doing to my charts, because I've been at it for 5 years. I've crossed over 10,000 hours quite a while ago. All right, so let me just make the parameters super clear. All right, and then I'm going to wrap it up here. Don't want to see below 2850. The next clue, if the wave 4 low is in, which is debatable, price is going to get above 33.5 cents, $30, 3.5 cents. Price needs to get above that level, which would convince me, or at least the evidence would be strong, that wave 4 is done. Now look, it can come all the way up in here, but not quite get it, because it's always possible that this is an A wave, and it's going to get an A, a B, and the C wave is going to come back further in time, somewhere over here. This vertical timing fib, if price goes sideways and comes all the way across this space, all the way to Monday, the 26th, which is like next Monday, if we're still in this region, or worse, if it comes down here and gets past this line, especially if it's, look, I even put an X there for visual reference. If price comes over here, it ain't a wave 4 anymore. Now that I'll cross that bridge when we get to it. But what I would love to see is that it doesn't make a low. Now look, here's a micro parameter. You've got the 28.50, okay, and you've got the 35 cents. So that's like what is that? That's $1.50 range. But a micro level, a micro parameter. If you went long right here, right now, you could put your stop below 29.23, depending on your definition of risk. Because the way I'm thinking of this now is if this comes back through this level, it's probably going to come all the way back down into here. Now, I didn't measure for that yet. You're going to watch me do one measurement, and this is just pure speculation. If that's an A wave, and then price comes all the way back up to just say, 29.90, let's say, then you could reasonably expect to see a C wave come back down into these yellow fibs. Whoops. You're going to see it would be reasonable to expect price to come back down into these yellow fibs to finish off the C wave. Okay. Now, I don't want to talk too much because the fibs are just what they are. So I try to remain objective and I try to remain detached from my trade. It's very difficult to do that. But these are just the parameters, okay? So if it can't get above 30, 35, here's your nano parameters. If it can't get above 30, 35, and it starts coming back down and gets below 29, 23, I think it's much more likely that you're going to come out in time. It's going to burn more time off the clock. And then it's going to come down here and make another low somewhere over here. Just call it below 29, and then holds above. It still has to hold above 28.50. Must hold 28.50. Then if you're lucky enough to ride along and get up into this box, I'm going to take the gains. It's always good to take gains at the top of a wave 3. Normally, I take all the gains at the 1618, but because of this structure, it has been extending. So I'm going to give it the benefit of the doubt that wave 3 is going to extend up into here. So there you go. That's what I got. And listen, if you appreciate what I'm doing, I really appreciate you guys. Those of you who have bought me a coffee, there's a link down below that says buy me a coffee. I love it. It encourages me to keep doing these videos, to take time to do it. It does take me a fair amount of time to work up the initial analysis. So if you see me post 5 charts, that's at least 20 minutes on each chart. So I'm putting in the time, and that's how you get good at this. You've got to put in the time. So look, if I'm creating value for you and you made a couple of crazy, great trades, buy me a coffee. I won't resist. I will accept it lovingly. Thank you very much. Also, if you're looking for help with your psychology, there's a link to a club that I highly recommend, The Professor Trades. The link is down below. You click it, $1 a day. It's a no-brainer, less than $1 a day. Come in the club. You can do a trial, 7 days for $7. Just click the link. If you don't feel it, if you're not liking it, just cancel. No big deal. $7. I mean, 2 coffees is $7 in this day and age. So I highly recommend. Anyway, thanks for watching. If you're new and you're watching this and you're liking the analysis, go ahead and subscribe. I'm going to be updating silver as we go along through this bull mode. And also, if you like, it helps me out. Just encouraging me to keep doing these videos. I love that you guys are into it, watching, you're engaging with me. Keep it up. If you have any questions about Elliott Wave, feel free to drop it in the comments below. I will reply. And I really hope to see you inside of the club, led by Armando, the greatest scalper around. Armando, it's nuts what he does every day in the club. So don't take my word for it. Come join the club. Anyway, thanks for watching. Good luck. And remember, when it comes to silver, don't get killed. All right. Thanks. Bye-bye.